And if the government knows that they can't be criticized, then that opens the government up. They have a lot more opportunity to be oppressive if they don't think there's any way to speak out against it. But if the Fed continues on this trajectory, the government might not be able to provide this support. And a lot of these banks that have, gotten a reprieve are going to fail.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
I'm talking about inflation in Japan. And the most recent data coming out of Japan for CPI in June is a year-over-year increase of 3.3%. And that is actually a tenth higher than the year-over-year rate in May. So based on the Japanese CPI, we're getting even higher inflation. So inflation is going up, and on the core though, there was a slight decline in the June numbers from 4.3 to 4.2, but still now you're talking about core inflation, right, in Japan, better than 4%. Now, for years, the Japanese government was telling the Japanese people that the problem in Japan was not enough inflation. Of course, that wasn't the problem. That was one of the bright spots of the Japanese economy, that at least they didn't have a rising cost of living, or at least the cost of living was rising very slowly. But the Japanese government said, no, we need more inflation. The only reason we don't have a stronger economy is inflation was too low. That was the lie that they continued to tell. And under the pretext of that lie, the Bank of Japan printed tremendous amounts of Japanese yen and used that Japanese yen to buy up government bonds. And that enabled the Japanese government to go into debt, selling those bonds to the JGB. The problem now is that they've succeeded beyond their expectations in raising the inflation rate, because their goal was 2%. Well, they've clearly overshot it. In fact, based on the official numbers, this is the first time in 8 years that headline inflation in Japan is higher than the US, because our headline number, not our core, just the headline, is 3%. So in Japan, you're at 3.3. That's 10% greater. But what happened the other day is the Japanese government, or the Bank of Japan, came out and reiterated their commitment to achieving their 2% inflation goal, as if they haven't done it yet. Apparently, the Bank of Japan is still not convinced that inflation is high enough to qualify for 2%, even though we're at 3.3 and rising. And so to make sure that we've got 2% inflation and it's here to stay, even though it's 50% higher than that, the Bank of Japan is committing itself to maintaining negative interest rates. They still have short-term interest rates, negative 10 basis points. In the face of rising inflation, well north of 2%, they still have the pedal to the metal saying we need more inflation. We're not convinced that inflation is here to stay. And in fact, the Bank of Japan reiterated their commitment to control the yield curve control on the 10-year JGB to keep yields below 0.5%. Now, the yield's 0.5%, inflation is 3.3%. What idiot would lend money to the Japanese government for 10 years at 40 basis points when inflation is 330 basis points? Well, no idiot. That's the problem. The only ones dumb enough to buy those bonds is the Bank of Japan. But they know that if they take away the yield curve control, if they stop creating more inflation, then yields are going to spike, and that's going to force the Japanese government into a untenable predicament, because they won't be able to make the payments on the debt. And there's going to have to be a massive day of reckoning in Japan. And so to avoid that political decision, the Bank of Japan is continuing to create more inflation, claiming that there's not enough. Now, at some point, the markets are going to stop believing the Bank of Japan. In fact, the Japanese yen fell about 1.25% on this announcement, but we haven't had a complete collapse yet of the Japanese yen. But as the markets start to see through this charade, it is going to put tremendous pressure on the Bank of Japan. But the reality is the United States is in even a worse predicament than is Japan because of our twin deficits. Japan still operates with a trade surplus, and Japan is still a creditor nation. The United States is the world's biggest debtor nation. We owe a fortune to Japan. The Japanese government holds over $1 trillion of U.S. treasuries. So one way the Japanese can try to alleviate their problem is by dumping those treasuries. They can sell those treasuries and then use the proceeds to pay down some of their own debt. We don't have that luxury. We owe everybody. We're not a creditor like Japan, but the Bank of Japan is already trying to spare Japanese politicians from having to make these difficult choices that they would have to make if the Bank of Japan were to allow rates to rise. Well, the Fed is going to be in a similar predicament soon. Yes, the Fed has been able to raise rates. We got interest rates up to 5%, but we really can't move them much higher because we've already seen the adverse consequences in the banking sector. We've already seen the failure of 3 or 4 major banks. Many more banks would have also failed but for the government backstops. But if the Fed continues on this trajectory, the government might not be able to provide this support. And a lot of these banks that have gotten a reprieve are going to fail. In fact, more negative news in the commercial real estate market. I was reading about more high-profile defaults on commercial real estate. Sterling of Greenlight, I forget for the name of the company, that they operate all these hotels, and they just couldn't make their payments on a couple $100 million loan on a piece of property, with big warnings out there about the commercial real estate sector and all of this debt. I think it's like $500 million of debt coming due in the next year, several billion over the next few years. And there's not going to be any way to finance this because the value of the collateral has already collapsed. And again, I've been warning about that for years and years when so many people on Wall Street were looking forward to rising interest rates because they thought that rising interest rates would help the banks earn more money because they could charge higher rates. I was one of the few people pointing out the damage that higher rates was going to do to their balance sheets, to their assets, to the loans, the long-term loans that they had already committed to, all of the treasuries and mortgage-backed securities that were on their books. And so all of these chickens are coming home to roost right now. And this is putting a lot of pressure on the Fed. In fact, I was reading an article today on rents, and Moody's, has been tracking rents for about 20 years. And they're looking at, what the typical homeowner pays in interest on, or not in interest, in rent as a percentage of his income. And when they first started keeping track about 20 years ago, the average renter spent 23% of his income on rent. And 10 years ago, that was up to 26%. Today, it's now a record 30% of monthly income going to pay the rent. Now, this is also pre-tax income. So obviously your after-tax income is diminished, but they're just looking at your pre-tax income, which is not really your take-home pay. But of your pre-tax income, people are spending 30% of that on their rent. Now, what does this mean? This means that people have less money left over for other things, or if they're trying to save up a down payment to buy a home, well, they have less money available to do that if they're spending more on their rent. But that's not your only cost. If you're, renting an apartment is the rent, because you also have to pay utilities, and those rates have been going up. So there's other costs that a renter is going to have to pay that relate to renting a place, and all that stuff is going up. And this is evidence of a diminishing standard of living. That is why a lot more people have to take second and third jobs, because more of their income is going to rent. Now, 30% is the average. That means that there are some people who are actually paying a lot more than 30% of their income on rent. And that is a big number. But I was reading this article too. It was more of an advertisement, really, disguised as an article from a company that's in the mortgage business. And they're trying to persuade people to buy homes because, of course, when you buy a home, you take out a mortgage. Now, I did read, too, that turnover in the housing market is now also at a record low, because there's a huge spread right now between what sellers want for their homes and what buyers can afford to pay. Because the sellers are still looking at prices from a year or two ago, but buyers can't afford those prices because mortgage rates are so much higher than they were a year or two ago. So there's a big disconnect between what sellers think their homes are worth and what buyers can actually afford to pay for those homes. So it's a huge spread. And so right now what's happening is just there's no transactions because the sellers don't want to come down. The buyers can't come up, right? So it's like a deadlock. And so you're seeing minimal turnover in houses. And again, another thing, and I pointed this out, was that a lot of people, one of the reasons they don't want to sell their homes is because they can't buy another one, because they can't port their mortgage. If you've got a 30-year fixed rate mortgage on a home, the only way you can keep that mortgage is to stay in your home. If you sell and try to buy a different home, well, you're going to have to get a brand new mortgage at a much, much higher rate. So that has really frozen a lot of people in their current homes. And that may be a reason too that people may even pay a mortgage if they're underwater, because what they're really trying to preserve is not their home, but their mortgage. That's their great asset, in that they've borrowed all this money on the cheap and they have 25 years or how many years left to pay it back. And so I'm a free market libertarian. So we really are at odds with one another with that respect. But where we have some strong common ground is freedom of speech, freedom of expression. And we both know that the most important speech that needs protection is political speech, in particular, speech that is critical of the government. That's when free speech is the most important. Your freedom to criticize the government. And also, free speech is about protecting unpopular speech. Because popular speech, that doesn't need any protection. If you're just going to say something that everybody likes, well, fine, you can say it. Where you need protection is when you want to say something that a lot of people don't like. Right? There's an old expression, I may disagree with what you say, but I will defend your right to say it. Today, it's the opposite. I disagree with what you're saying, and you have no right to say it, right? That's what the left is now all about. In fact, on the panel, somebody pointed out, and then Robert Kennedy Jr. reiterated, because one of the women that was up there was from the American Civil Liberties Union. And I disagreed with a lot of what they did, but at least they were on the right page when it came to freedom of speech. I mean, they would defend the right of a Nazi to free speech. And you have to do that. you have to defend speech that you don't like. Because if you're not willing to defend speech that you don't like, then you don't believe in freedom of speech. And eventually it's your speech that's not going to be allowed. But again, the most important speech that needs to be uninhibited is when you're critical of the government. So when the government says something or does something, you have to be able to criticize it. And what's been going on with social media was the coordinated effort on the part of government and social media to suppress speech that contradicted the government or a government narrative. And that's precisely the type of speech that needs to be protected the most. Even if the government is right, even if what the government is saying is right, you have to be able to criticize the government. Because if you can't criticize the government when they're right, well, then you definitely won't be able to criticize them when they're wrong. And if the government knows that they can't be criticized, then that opens the government up. They have a lot more opportunity to be oppressive if they don't think there's any way to speak out against it. So you always have to be able to question the government. You can't say, well, it's so important. This piece of information, like when it comes to COVID, it's so important that nobody should be able to criticize the government during this important time. You cannot give up that principle just because it's convenient.